All right. What is up, tycoons? What's up, traders? Super excited for today's video. Have another really amazing video put together for you guys. We're going to go over lots of really important information in the market. And then we're going to take a look at some of the top stocks. We're going to take a look at the NASDAQ and, of course, TLT. Going to do a full breakdown on that, as well as some other sectors that have been getting a lot of attention. Okay. I've been, focusing on this theme of rebalancing and how potentially we're going to see some rebalancing in the market. So make sure to smash the like button, subscribe to the channel if you guys are new. We're going to get straight into it. The NASDAQ 100 reshuffle adds a twist to the $2.4 trillion options event, right? We have a huge OPEX tomorrow. All right. We're going to see crazy volatility. We love volatility as traders. This is how you make your money. You make your money in volatile environments, right? Investors much more prefer the unvolatile environment. But if you're a trader, these present really big opportunities. Now, retail investors recently splurged $3.9 billion on cash equities last week per JP Morgan. The NASDAQ attracted most funds while SPX lagged, and among single stocks, Tesla, Apple, and NVIDIA dominated the $1.3 billion inflow. Did the retail herd just get trapped? And we're going to go into why they may potentially have gotten trapped. We've already seen Tesla dropped big today. Okay, I think it was down over 9%. The significant rise in short rates has had no impact on aggregate household disposable income. This is really important, okay? And we're going to go into and focus on this theme of rebalance more and more. I've covered it in a few videos, but if you take a look at interest income from rising rates has equally matched the rise in debt service costs. Both are up 170 billion annualized since the post-COVID bottom, equally offsetting each other. And so what this means is that the retail ETF XRT could be very interesting, okay? And the reason I say that is not only the data I just gave you guys, but we have the Fed funds rate down here, and you can see once the Fed fund rate is going up, right, then you see this peak here, and we have a crash here. We have the financial crisis, and the Fed just completely obliterates the Fed funds rate, and we go in this massive bullish cycle, right? And this is on XRT, the retail ETF. And then you see, the Fed fund rate start to go up again. And this is when it's lagging, right? It's very, very choppy. Then we have the COVID crash right here, and they cut the rates again. And then we see a massive boom, and we've seen the Fed funds rate rise. And meanwhile, we've seen XRT dropping. So if the Fed funds rate is actually going to start getting, cuts, whether that's in the near term or maybe a little bit more of the longer term future, XRT could potentially be a good setup, right? And that's where we could see some money start to flow back into, is in the retail ETF. Now the Dow, all right, has been absolutely just killing it, honestly, right? When you look at industrials, things like XLI, you look at the Dow transportation average, it's just absolutely been smashing. But it notches its longest win streak since 2017, while Tesla stock drags the S&P 500 even lower. So I thought this was really interesting. We have, one of my good friends right here. He focuses mostly on the Dow Jones Industrial Average. I've posted videos before in the past on XLI. And if you look at the XLI chart, it's been absolutely going ballistic. All right. This right here is KBE, and this is the S&P 500 bank ETF. And banks have surprisingly been reporting some good earnings here. And we see a very, very textbooks and very, very clean inverse head and shoulders, right? You have your left shoulder, your head, your right shoulder. All right. We broke this neckline here, and we got a strong push up, and we're above all of the anchored VWAPs here at the moment for the KBE S&P 500 bank ETF. Again, just focusing on that theme of rebalancing, right? It's not all one sector anymore. It's not just tech that we're seeing rallying. We're seeing many, many things other than tech rallying, and other than just all the big names. Now, this is, I think, some of the most important data relevant right now to traders. If you take a look at where we're at this mid-July cycle, and what's extremely important is this blue line right here. What this is that we're looking at is the pre-election year and aggregate cycle seasonal patterns. And you can see in the blue line, this is your pre-election years, and we typically see a peak in the middle of July, and we start to see tech selling off. Now we have a huge earnings season coming up. I've already done a few earnings videos and earnings expectations. There's been lots and lots of downgrades, right? People are not so optimistic on earnings for tech companies, and as well as just the S&P 500 in general. Now, there's two ways to look at that. One is that they're right, okay, and stocks could react how Tesla reacted, or The other one is they're wrong, right? They downgraded things so much that it does actually leave potential for upside beats. So that's definitely something to consider. But just going off of the seasonal data alone, we see that we typically peak in the middle of July and then we pull back heading into August. And then we really ultimately just consolidate, okay, up until the later half of the year. And we see November, towards the end of October, we see a huge push up in the market. So it'll be really interesting to see if this plays out. This has been a really, really useful tool for, really just going into the market, taking a look at the pre-election year seasonal patterns. Now, we've been crushing it in the Discord. Okay, XLV is a play that I've shown it on YouTube a few times. I showed you guys the setup. That play was up 253%. We still have till September on these contracts. I did sell most of them, but there's still some time left on those. TLT, guys, people say you can't make money on bonds. As an options trader, the bond market is literally more volatile than the stock market right now. Just take a look at the MOVE versus the VIX, and you can see that bond volatility is much higher than stock volatility, and that's how we're getting massive gains on things like TLT. Okay, so I'm going to break down what it is that we're looking at, of course, in some of these different sectors of the market that we're looking at and playing, as well as the different setups and things that I'm looking at on TLT. Right, if you take a look yesterday at 2:18 p.m., talk about how TLT is overbought on the 4-hour chart and has bearish divergence on the 1-hour chart. We take a look here at our 1-hour chart, okay, and this is in the Discord posting this analysis. We have a high here on the RSI. We have a high here. We come up, we make higher highs. So you can see that the price is going up. Meanwhile, the RSI is making lower highs here. That's a bearish divergence. We also have one of my new favorite patterns, the bump and run. We have a prevailing uptrend, and then you get this bump in the chart. All right. And then ultimately you get a run down. All right. And that's exactly what we got today. The analysis played out perfectly. You can see one of the other, admins in here, Buddha, also posting his analysis and, talking about a further sell off. This was last night. And we did see that further sell off today. All right. And then, this morning, all right, before market open, he's also talking about ES and NQ, the NASDAQ. And he's saying for shorts, NASDAQ would be a better trade. It's a long way down at 15,790 breaks. All right. We also see that the TLT 1-hour bump and run was playing out pre-market. TLT, you pretty much have to swing trade. Okay. Most of the move happens, pre-market and after hours. So we did get into the puts right around here, and they were down, what some would call a significant amount, about, I think they went down like 20-30%. But when you're looking for, really big gains of 50 to 100, 150, 200%, you can stomach some of those gains. And you can see that the whole move happened pre-market. We opened up, bounced, and then we actually went down even lower on TLT. So really amazing day in the Discord. All right. This is the NASDAQ futures right here, NDX. And you can see we broke down today and we came right here, right around to the month to day anchored VWAP. But ultimately we closed here on this 15,598. This is NQ actually, sorry, not NDX. But we ended up closing right around that 15,598 support level. We definitely flipped that to resistance. It'll be real interesting to see how the market reacts tomorrow. Now, don't forget, everybody, you can always email me at zackleytrades@gmail.com for a one-on-one personal session. We can go over whatever you would like, and we'll work on scheduling a time that works for the both of us. So, feel free to email me anytime for a personal coaching session at zackleytrades@gmail.com. Today's video is sponsored by Simply Wall Street. It's a really great website, app. All right, they have an amazing platform. If you're not a pro at fundamental analysis, they have their pros doing the hard work for you, looking at the PE ratios, price to sales ratios, many other things as well, and breaking it down with some nice graphs and charts to help you compare to the industry average, the industry standard, as well as the peers. And as always, today's video is for informational and educational purposes only, and not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. Now here, I've got a really good chart for you guys. Okay, this is the SPX S&P 500 index. And this is a monthly macro chart, right? And what I'm seeing here is basically a signal that we could be going on a massive, massive run in the market. So to really explain what it is that we're looking at, we have our Kappa curve here, and then we have the Shand indicator. And being that this is a monthly chart, again, it's much more of a macro. And I've measured, okay, each time that we've gotten a rounded bottom here in the Shand and also a cross above zero. That's what this black line right here. Okay. And this is stuff that I'm looking at for macro, data, macro analysis. And each time that we've gotten this rounded bottom followed by a curve above the zero line on the Copic, we've had a huge rally. Now, what your definition of huge is varies. Okay. But back in the day, right before the 2000s, and back in the 90s and before, this typically led to about a 20 to 30 or 40% rally. All right, but since then, right, we've had a 200% rally, a 48% rally, a 90% rally, and also a 120% rally. So the monthly candle isn't closed yet. We haven't seen if this is truly going to curve up again, but we have gotten the nice rounded bottom, which typically precedes the crossover above the monthly Copic. And so this essentially entails that, we could be due for a really, really big, another bull run anywhere from 20, 40, 50%, potentially even up to 90 or upwards of 100% in this next bull cycle. All right. So, this is definitely something that I'm paying attention to. You see, you get these corrections and then you get the crossover. We had our correction here. All right. And we're in the correction phase of that correction, trying to break out of it. And it seems like we're about to get this crossover here on the S&P 500 index. So I know, YouTube thumbnails can be very bearish. Okay. Analysts everywhere are bearish. All right. And, there's always going to be bears in the market, but you want to stay focused on the big picture sometimes. All right. Not so much on the day-to-day in the macro, especially if you're not as much of a day trader or a short-term swing trader. Right. If you're a long-term investor, these are more of the long-term things that you want to be looking at rather than just, every single day-to-day swing. Okay. Now, one thing that's also very important from a macro perspective is the Fed balance sheet. And I've touched on this in several videos in the past, but this horizontal white line, okay, this is where the Fed balance sheet is at right now. And if you take a look at where the stock market was, all right, at this time of the Fed balance sheet, we are only 1.25% away from that point, meaning that, basically the Fed balance sheet, it kind of dictates market performance, whether you agree with that statement or not. All right, the evidence and the data is there. And so when you look at where the Fed balance sheet was back in August of 2021, and you compare it to where the Fed balance sheet is right now, there's literally only a 1.25% difference. All right, you see we have it drawn up to this red dotted line here. That's exactly where the market closed. So the market has pretty much made an entire round trip, okay, based on just the Fed balance sheet going up and also making a round trip down to these levels. Right. You can see here the bank crisis led to a spike in the Fed balance sheet, right, introducing liquidity into the market, and the stock market has not looked back at all ever since that time and has really just gone almost in a straight line up. This right here is the peak of the bear market, and you can see shortly after that peak, once the Fed balance sheet peaks right here is when we start to see a really steep decline in the S&P 500 and the stock market. Now, the stock market's up big this year, but it's not because of earnings growth. If you take a look at the S&P 500 earnings per share, all right, we're not seeing massive growth in the EPS, all right? It's actually lower than levels than it was in 2022. This, in my opinion, is the reason why the stock market is up on top of the Fed balance sheet, on top of the AI boom. All right. There's many different factors. There's not going to be one specific reason why something is going up. But when you look at US year-over-year inflation rates since 2021, we've seen a massive drop and a massive decline in inflation, which is, what investors wanted to see. Okay. This is what Wall Street wanted to see, and they're seeing it. And so this is one of the big factors also helping drive the price up in the stock market. This right here is the 12-month ahead recession probability. And what we're seeing is that on July 23rd, right, the Wall Street Journal Economic Forecasting Survey has lowered it down to 20% disinflation on progress, or down to about 20%. You can see before that, it was at 25%. Okay, so it was lowered to 25% on receding debt limit and banking risks. And then most recently, it's been lowered to 20% on disinflation progress. So I just mentioned disinflation, and we're seeing that, that is also lowering the 12-month ahead recession probability. And now, analysts are putting that at 20% chance of a recession in the next 12 months, further increasing the odds of the whole soft landing that Jerome Powell is seeking to achieve. Now, huge earnings weeks, okay? I've covered earnings. I've dropped about 2 videos on earnings in the past week. Really great videos to watch and get some insights on. But 80% of the S&P 500 equity cap will report by August 7th, with about 48% reporting on July 28th. So not only do we have OPEX coming this Friday, we are also going to have a huge amount of earnings and really just see crazy volatility in the market due to this earnings. So be prepared for that, okay? Know which companies are earnings. Yeah, there are some earnings, you could play if you guys like to play earnings. It's very risky. It's very much gambling in the sense of playing earnings, especially with options. And oftentimes you either lose all your money or you hit big, and a lot of people hit big on Nvidia. So I'm very certain that, the next round of Nvidia, that next round of Nvidia earnings, or, just chip related stocks, I really wouldn't be surprised if we see a lot of people pouring into things like Nvidia with call options and bullish plays. That wouldn't surprise me at all. Going back to CPI, the June CPI print was likely the last for favorable year-over-year effect. And the reason is because this was around when inflation peaked. Okay. And so after then, inflation has been coming down. So we're going to be comparing to lower numbers. Whereas before we were comparing to CPI numbers that were going higher and higher last year. Now we've hit a peak. Okay. And so if we go full circle right now and we go to the very beginning of the video where we looked at that pre-election cycle year data, and it shows that we typically peak around July. All right. We get the June CPI report in July, right? Because CPI is a month behind, it's a lagging indicator. And we're seeing that this is most likely the last of favorable year-over-year effects. Then a lot of things start to coincide with, hey, well, maybe, tech and maybe, some of the market is going to start to cool off, right, and consolidate throughout the rest of the summer, heading into the spring. And then we start to see that final push towards that later end of the year. There's a lot of evidence supporting these kind of things. And this is a lot of things that I'm considering into my plays whenever I'm looking to make trades or investment. This is a lot of the stuff that I'm considering. So I'm just sharing it with you guys. Hopefully you guys find it, good as well. Now, I've showed XLP in a few videos. All right, I actually got an XLP right around here, and I sold when it came up to our level here. But you can see it actually just broke out of that level now. Now we have our fib trend lines on here. All right, and you can see the first time once we were able to break above here, we approached the top of the second trend line, but we actually found resistance here at our 75.18 level. That's when I closed my positions, and then we dropped back down into our range, and we did a really good job of trading in this channel here that we have along these trend lines and getting above finally the 74.35 level, also holding the 73.52 level. And we saw a massive push up today, and we are, basically rejecting the top of this trend line here. So it wouldn't surprise me if we start to see this trade sideways a little bit, so it has a little bit more room to go back to the upside and test that trend line again. And if we break through this trend line, then we'll be in the next channel right here. And this is going to take us up to our overhead supply zone where we formed a triple top. Now, I've explained before that a triple top is really bullish to me, okay? The more times you test a level or a zone, the weaker it's going to get. And so, being that we've tested it many times over here in the past, that you have to ask yourself, is there still going to be that remaining supply imbalance if we come back into this zone? Have the orders that were filled here, here, and here been replaced, right? Have those orders been replaced? Were the same sellers present here, and present here, or are all of these orders getting filled up, right? And if we go to push up into this zone, is it potential that we get a breakout retest and we actually flip this area to a demand zone rather than a supply zone and get a breakout retest and push up higher? That's definitely something I'm considering. Now, we had some question marks over here last time. Okay, we were looking to see where we're going to get our crossover. When I entered into the position, I explained the thesis behind it. when every time that we've been overbought and followed by a MACD crossover, we've seen a strong move down. And each time we've been oversold, followed by a MACD crossover, we've seen a strong move up. And we came back to those conditions most recently over here in that overhead supply zone where we dropped made the triple top. We were overbought, followed by a MACD crossover to the downside. And here we were oversold, and then we got a MACD crossover to the upside, and we saw a strong push to the upside as well there. This is the consumer staples sector, right? And so it's not a surprise that we're seeing the NASDAQ and tech bleeding, and we're seeing money going into XLP. This is XLU right here, the utility sector. We also played this one, all right, at this initial moment right here on this setup. And Leon in the Discord, Tycoon Leon, he's been on many of the Tycoon talks. He runs the Discord, it's his Discord. And you can see here, XLP or XLU had a really tremendous day, and he actually got into XLU recently and was able to take some very nice profits off the table. Initially, we had a cup and handle right here. We got the cup and handle breakout, came up, hit the target here of 67.85. You could also call this an inverse head and shoulders, right? Where we take a look, and right here, we have the left shoulder, we have the head, and we got the right shoulder, and then we got that nice move up. TLT, right? So I know a lot of you guys are here for TLT. Here's the macro structure, right? And I'm starting to do dedicated bond videos each week where I go into LQD, HYG, TLT. We look at TNX, JNK, and do a very detailed analysis on those. But TLT has been following the structure up until basically the stock market bottoms, right? In this period here, the stock market bottomed, and TLT has gone completely sideways since that moment, and it really broke the structures that we were looking for. But we did end up breaking this very big triangle pattern that we had where price action was squeezing. We got a breakdown retest, and we're pushing lower, and we were targeting anywhere from about $98 down to about $95 on TLT. We're looking to potentially see if we're going to fill this gap down at 95. If we zoom in a little bit more, the last video was called, is there a breakout in bonds, that I did on the bond market? And you can see why, right? We were looking at this trend line here. We were poised for a breakout, and we got a very strong breakout today. We actually closed our put positions, right along this area here, because we want to keep in mind of a breakout retest and then push higher. And so we're retesting that area here. If we break through this trend line here, all right, then there's a very strong chance that we get a look above and fail, which is going to be bearish, okay? Because this specific moment right here, this is the moment for bulls to step in and really push price higher on the breakout and retest, all right? That's the chance for them to say that we're in control of the price action, get closer to that 104 area right here towards our year-to-date anchored VWAP, and really show that, they have some momentum going on in the stock, in the bonds, all right, in TLT. If they don't do that, again, that's going to be a look above and fail. That's going to be a little bit of a bearish signal. The new structure that we do possibly have forming right now is going to be an inverse head and shoulders, right? So we're going to have a neckline here, okay, and then we're going to have a left shoulder, head, right shoulder. And so if we do break this trend line here to the top, right here, this trend line, then I will be looking to target some TLT call options, potentially to go right around that 104 area. Right there, right around that anchored VWAP. 102.88 has still been a major resistance level. If you guys take a look, we came right up here to it, and then we ended up gapping down really, really big today, seeing lots of sellers in the market. That pretty much wraps up today's video. Hopefully you guys enjoyed it. If you did, smash that like button and subscribe to the channel for more. Don't forget, you can always email me for a one-on-one coaching session at zachleytrades@gmail.com.